What's going on, guys? I want to do a trade breakdown of yesterday's trade on NQ. So what I was looking at going into the day pre-market, so none of this had happened yet, but going in pre-market right around this time, 9, 8:30 a.m. in the morning, price was in a channel. So below the current price, we had obvious rejections and bounces off of this key level here. You can see has held up. So right around 8 a.m., I saw that yet again price was bouncing off that level, which really established that that was our level below. And then to the upside, we have a bounce and then several rejections where price could not get over in the past. So I identified the channel that we were in, and as always, you want to wait until for the real move with continuation. You want to wait, and I was either waiting to see a break to the downside, a hold, retest, and then rejection down. So that's what I was looking at if we were to go that way. And then the way price ended up going was a break to the upside. So break, hold, and then bounce. So that was the trading plan going into the day. And I was watching other instruments as always, but I was keeping my eye on NQ. And as the day went on, market opened here. We got a really strong pump right out of market open. So it was like, okay, it's looking like we may be able to break this level. Saw the rejection. And then at this point, this is when I started getting interested. So the break is the first step in our entry criteria. So we see the break of the level there. And it wasn't just a one candle or two candle break. We could see that price held for, 1, 2, 3, 4 or so 2-minute candles where it held above that level. And then when it came time to retest, if we zoom in here, we started to see the hold. So here we saw the hold, here we saw the hold, here we saw the hold. So after I'm seeing multiple candles holding above this level, and even seeing some reactions at the level, that's when I'm really getting interested in the trade. So I didn't enter at this point because the last step after breaking and holding that level, and it respecting it, obviously, it didn't really break below, just wicked below here, still respecting that level, but this was the entry candle. So this was bigger than what I typically like to see because I want my entry to be somewhat close to the zone. Typically, no more than the size of the zone. So you can see here, that's like my max distance that I want to be entering from. So we got the bullish candle. You only want to enter on either on a candle that closes bullish or one immediately after that, because sometimes the candle may not push all the way up to your zone. Let's say it's closed strong, but it closed here. On that next candle, if we got that push, I wouldn't wait for the close. But other than that, we only want to enter on strong bullish candles. So I got that, and if this was probably even just a little bit higher here, I would have said, okay, we missed the trade, we missed the move. I'm not going to enter when it gets that far away from my zone. But in this case, you can see it broke a little bit too far away where it ended up closing, but immediately got the pullback, and it wasn't that much of a pullback. So in that case, I'm okay. I waited for it to come back, and that's boom. That's where we got filled. And yeah, we're in the trade. So stop loss was placed right below this zone here. And that's when our trade is going to be invalidated if we break back below this zone. Targeting, usually a 2-to-1. We want to be out of the majority of our contracts. And then also the next key level is always a target for runners, and making sure that we have room for that 2-to-1 in the first place. So price came down, literally nicked the stop loss, somehow didn't get stopped out. That never usually happens. It's usually the other way around. But price almost stopped us out, then immediately just got this monster push to the upside. So I didn't trim any contracts up until around this point here. Right around the 1-to-1 risk to reward is when I like to take some contracts off. And I like to take like 20, 25% of the position off. So you can see down below on the order fills here, I got filled 8 contracts long at 10:22 a.m. and that was back here. And then the first sell was 2 contracts, which would be around 20% of the overall position. You can see 18,327. So I actually got out a little bit over 1-to-1, which is always nice. I didn't move my stop loss. And the reason for that is because when I'm taking profits here, it isn't to actually profit and be okay with that winnings on the trade or move stop to break even. The one-to-one profit taking is simply to eliminate risk. If it does end up stopping you out, you're going to take a much smaller loss in that case, and it also keeps you in the position so you can go through a pullback and remain in the position. So that's the thought process behind it. I trimmed two off. It immediately pulled back, of course, and then it pushed right on up to our 2-to-1 target here, and that is when I took off four more contracts. So sold 6 out of the 8 at that point. So the majority of the position was completely off here, and then I saw that we were getting really close to this key level. So if we see a rejection at a key level, I'm gonna get out of the rest of my positions. I was monitoring this, and it almost seemed like it was gonna break, because if it breaks above this level and has a strong close or hold above, I can move my stop loss just right here, and then give it a lot more room to progress and take profits on the runners, or just let it run. At that point, it's all profit, and it's just icing on the cake. So the key levels played out beautifully on this trade. I sold one, I think, at 18,363.5. So that was the highest contract I was able to sell at. It looks like that was right here. Right around this level here, I got out of one more. I think it was probably around here when I got that rejection. And then I got out of my last contract shortly after, because I had moved my stop loss pretty tight, right around this zone, just a little bit below the level. So if there was a rejection, I got out. And the total profit on this one was just under 1,200, and the initial risk was only $600. So great risk to reward on this one. Could have even gotten, if it would have broken above this level, which it later did and held, you can see much more potential to the upside, which would have been a massive risk to reward. But this one was managed beautifully. Great exit. Couldn't ask for a better exit. And it's just great to see the key levels playing out and being respected over and over again on the chart. So I hope this explained the trade. It all makes sense. And yeah, leave any questions or comments below. Peace.